You can tell me what your name is and your job title.
My name's Laura Foll and I'm the co-portfolio manager of the Law Debenture equity portfolio.
Now, Law Debenture, it has a really interesting structure, rather unusual structure. Do you want to talk us through that?
You're right, it's very unusual. So I co-manage the 80% of the trust that's listed equities, so it's mostly UK equities, it's roughly 1.2 billion. The unique bit about it is that there's also 20% of the NAV in an independent professional services business. Now, I'm not trying to run this bit of the business. I've not got two hats on. This is completely independent of me. It's things like pension trustees, corporate trust work, company secretarial, whistleblowing. It's roughly 200 million value. It's just on a discounted cash flow analysis. And the two work together as part of the overall trust umbrella. And I'm very happy to talk about why it works, but it does work. The performance would suggest it works. But you're right, it's a very unusual structure.
So, how does it work? I've listened to your presentation, you get lots of stability in terms of earnings, but it's what that stability allows you to do. Let's explore what it allows you to do.
Exactly. So what it means is, when I'm running the portfolio, I run it alongside James Henderson. Day one of each year, we know that we have roughly a third of the trust income in the bag from the independent professional services business. So it's 20% of the NAV, but most importantly, it's a third of the overall income for the trust. Now, what that allows us to do in practical terms in running the equity portfolio is invest across the UK market rather than narrowing the focus to a particular set of high dividend yield stocks. We can invest in anything we want to invest in if we think it's a good total return opportunity. So if we don't want to invest in, say, tobacco, we don't have to. If we don't want to invest in consumer staples generally, we don't have to. It just opens up that investment universe, and we can show that historically that's contributed to the outperformance of the trust.
Happy days. You're outperforming your benchmark at the moment. So tell us a little bit about that.
So you're right, we have outperformed on a short-term basis, but I think much more importantly on a longer-term basis. And if we drill down into why that's the case, a lot of the best performers for the trust have been those zero dividend yield shares where it's been a recovery story. So think the likes of Marks and Spencer's. We bought into it roughly 5 years ago. New chairman comes in, does all the common sense things that you want someone to do in M&S, reduces the number of accounts, takes your pricing down to a more competitive level and turns that business around. And the nice thing about this trust is that we can invest with a 5-10 year time horizon. So we can be patient through those corporate turnarounds. Sometimes they take time, but that's gone on to be a fantastic performer, and we can have that patience here to invest through those turnarounds for growth.
Talk us through your portfolio. What are the kind of stocks that you and James like to pick?
So bear in mind, this is a 150 stock portfolio. And the reason that we do that is because it's a long list, exactly. And the reason it's a long list is because one way you could think of the trust is having one holding, the IPS business, that's 20% of the NAV. And then the equity portfolio is diversifying away from that one holding. So that's the reason when you look at it and you think, 150 stocks, that's a long list. There's a very specific reason for that, and it's due to the nature of the trust. So I haven't answered your question about sort of the top holdings because this isn't a high conviction approach. It's almost the opposite of that. It's a deliberately diverse approach. And what I want to be seeing in any given year is that the top performers are totally different types of companies. And that's what we've seen this year, and that encourages me.
What have you been taking profits from recently, Laura?
Things like the defence holdings we have reduced. So I think the likes of Rolls-Royce, Babcock, BAE Systems, we've reduced all of those holdings over the last year or so. The ratings, the valuation on those companies has moved materially higher in recent years. Think back to 5 years ago, defence stocks were under-owned, they were trading lower than the market multiple. The opposite is true now, that they're very consensual, they're widely held, the ratings have moved higher. So we've taken some profit in those names.
Have you done well in those?
Oh yes. No, they've the defence stocks have performed very well.
And in terms of UK equities, what's your view you mentioned 35% undervalued relative to the rest of the world. Talk us through that.
UK equities, you're right, trading at a sizable discount to the rest of the world, particularly the US market, which has performed very well. I think that valuation discount looks overdone. We've got plenty of global companies in the UK that are very well managed, good balance sheets, etc., but just happen to be listed here. And I struggle to see why they should have why it's justified that they should have a valuation discount just because they happen to be listed in the UK market. And I think the evidence that valuation discount is real is the sheer amount of takeover activity that we can see happening in the UK, several of which we've held within this particular portfolio.
So have you been a beneficiary of takeovers and so on, M&A?
We have been a beneficiary of it, but it's, it feels very good on the day that you get a takeover approach. But, and it's good for performance. Yes, it has helped, but that company is gone forever. Once you see that company be taken over, it's lost to the UK market and you can't invest in it, you've got to find a replacement for it. So yes, it's helped in terms of short-term performance, but I wouldn't want anyone to take away that this is great for the UK market as a whole, because it is a shame to be losing these companies to private equity.
Okay, my final question. Law Debenture, what's the outlook for the rest of the year and beyond?
We're really pleased with the performance of Law Deb, as I said, more importantly on a longer term basis than on a shorter term basis. So I see my job as the portfolio manager is to make sure that I use full advantage of the structure. So it is a really unusual structure, as we've discussed. It means that we have this huge flexibility. There are lots of opportunities, I think, out there at the moment, and we just have to take full advantage of that.
Laura Foll, portfolio manager at Law Debenture, thank you so much indeed for supporting the Investor Summit.
No worries, thanks for having me.
Really delighted to have you.